I'm going to say the seminal moment for me was when I saw the Canadian regulator issue an order that allowed for an ETF with the underlying asset being Bitcoin. Not a derivative, the actual asset was Bitcoin. That to me said, okay, here we go. Because I've always considered, and this is a personal opinion, that the SEC and the OSC work in tandem, and that basically Canada is a petri dish for testing ideas. And one of the big concerns about an ETF with Bitcoin, would it have huge tracking error? Would there be issues around the volatility of the actual ETF price? And if there was a 20% correction in Bitcoin, which happens all the time, that ETF has performed flawlessly. And I think it should set up for licenses issued stateside. Same with Ethereum, same idea. And it allows retail investors to invest without having to go through the whole crypto crap. So it was a seminal moment. I said, now I got to get involved.
That was Canadian venture capitalist and crypto investor Kevin Allaire talking about his crypto rabbit hole moment, the moment he knew that the cryptocurrency industry was going to be a worthy investment. During the inaugural Crypto Bahamas conference, an invitational-only event presented by Bahamian cryptocurrency exchange FTX and the SALT Venture Group, Allaire joined two other industry giants to talk about the issue of crypto adoption, stablecoins, and cryptocurrency regulation. During the conference, Circle co-founder and CEOs, Jeremy Allaire and Anthony Scaramucci, the founder and managing partner of SALT Venture Group, also discussed their crypto rabbit hole moments. Scaramucci, who previously served as the White House communications director, said he decided to invest when the United States Treasury Department considered the digitization of the U.S. dollar. Scaramucci also shared his early skepticism and how he regrets having not invested early in the space. We will now take you to the interview. But before we do, please take a little time to give this video a thumbs up, subscribe, and drop your comments and observations in the appropriate box below. Thanks, and enjoy the video.
Yeah, so I mean, I started getting really interested in crypto in 2012, and you know, kind of just reading about it, studying it, and then I think in early 2013, basically when I started using Bitcoin and sort of experiencing what it was to like directly hold a digital asset and synchronize a blockchain onto my machine. My background is out of sort of internet infrastructure, so I was looking at this as an internet infrastructure. Basically, at that point, it was very clear to me that like this fundamental innovation was going to kind of restructure the possibilities for how the entire global financial system worked. And I got very interested in how one could build on top of what that was. And so, yeah, it was early 2013, and I think the idea that captured my imagination was mostly people were talking about how you could issue an asset on top of the Bitcoin blockchain, how you could make it possible to write more complicated financial contracts through smart contracts. Those things were not things you could do on Bitcoin, and it's only now becoming possible. But the basic belief as I sort of went down the rabbit hole, as it were, was, wow, this is going to be enable people to build kind of protocols on the internet that are similar to the kind of protocols that we have for information and data and communications, but you're going to be able to do that for dollars, and you're going to be able to make those dollars programmable, and that will allow you to basically restructure all of finance and commerce and the way all that works. So it was, at that point, and I would say, synchronizing the Bitcoin blockchain on my laptop at the time was like the equivalent of downloading NCSA Mosaic in September 1993, which was like, holy cow, I can't believe this.
Yeah.
So basically, that kind of thing.
Anthony?
So a little bit different. I actually, prior to my disastrous career in the White House, which lasted 11 days, not 10, so everybody knows, I was actually at the XM Bank. I was working as the chief strategy officer there. And I walked into a meeting, and there were two Treasury officials talking to XM bankers about the digitization of the US dollar. And I looked at those people, and I said, wait, how are you going to do that? And they said, well, we're going to do it over the blockchain. And at a prior SALT conference in Las Vegas in 2014, the Winklevoss twins had come to the conference to talk to me about Bitcoin. And I said to them, it seems like a really good idea, but I'm an institutional investor. I'm sort of we didn't use that term back then. I'm a traditional finance person. I'm not going to get any of my clients to be able to buy into this. And then those two thoughts converged. Here's the Treasury Department talking about dollar digitization. Of course, that was 5 years ago. It didn't happen. And it got...
Wait a minute. It did happen.
Well, you happened. We're going to talk about that. You happened, but the government didn't do it. Somebody more important, I think, because I think it's better for a private sector company to do it than for the government. We can talk about that. But you did it, but the government was talking about it. And so I was like, okay, I got this wrong. I've got to go back and do some more homework on it. And of course, I got fired, I don't know, maybe a month later. Okay, so then I went and got to I went to GoDaddy. I bought skybridgebitcoin.com. And I said, okay, I've got to get up to speed on this. And then as I started to get up to speed, I said, okay, wait a minute. I can't buy this until it gets to 100 million wallets. Because if it gets to 100 million wallets, I'll know from Metcalfe's law and everything that we've discovered in the internet, it'll reach escape velocity. I think it'll, highly likelihood if you get to 100 million wallets, it'll go to 1 billion wallets. Can I store it safely? And then Fidelity, NYDIG, others, Coinbase had safe places to store it. Because if we're going to put 9 figures into it, I've got to make sure I don't get it stolen, the Mt. Gox hack, all those different things. And then the third thing, we had to make a decision on regulation. And this is where Kevin comes in. That's what Kevin said. That was his seminal moment. My moment was, is it going to be outlawed? And when the IRS made the decision that Bitcoin was intangible property, I went to law school. I only learned 2 things in law school. The first thing was don't be a lawyer. I thought that was the most obvious thing. But then the second thing I learned was about property. Ultimately in the United States, here in the West, in the Bahamas, anything tied to British common law, we hold property sacrosanct. I said, okay, if this is property, they are never going to outlaw. They're never going to be able to outlaw. There's too many checks and balances in the system. And so those 3 things converged, and we made our first Bitcoin investment, I guess, in October of 2020. So we're a little late, but I still think it's very early.
We're all still early.
I still think it's very early, but I could have gotten there earlier, but I was being more programmable about it and more institutional.
O'Leary also addresses the issue of institutional adoption and factors that will motivate all the big money investors to invest directly into crypto assets and not into derivatives as they are doing now.
And I'll take a stab at it from the point of view of an indexer, a guy who provides sovereign wealth and pension plan services. And so it's always based on allocations, typical sovereign funds. And the reason I bring up pension and sovereign, they are the investors. I mean, for all the excitement about Bitcoin, nobody owns it. I mean, it's a nothing burger asset in the context of sovereign and pension wealth. 800 billion is nothing. I know that sounds trite, but it's true. And so the way to get this asset to be a part of the real investment world is to get it regulated. Any of these assets, pick one. I personally would like to see stablecoins regulated first because it's easier to do that. But whatever happens, we need regulation because then here's why this works. So you want to have a 1% weighting in a $100 billion fund. A fund like that would have no more than 20% in any one of the 11 sectors of the S&P and no more than 5% weighting in any one stock or bond. That is a classic diversification strategy for long sovereign wealth, where trillions and trillions of dollars live every day. And so they would like to have 1 to 3% in Bitcoin. It's the one they want to start with. It's the granddaddy crypto. It's the one that's the biggest opportunity and the one that, frankly, the managers understand because it's been in front of everybody since the beginning of cryptocurrencies. If we get that regulated, they'll start putting on 50 to 100 basis point weightings. And then what you'll see happen, besides increased demand, you'll see less volatility because when you have a 1% allocation, it sells down, you buy back to 1% by market close. And of course, crypto is 24/7. So they'll buy it back up to 1%. If it exceeds, if it jumps and doubles in price, they'll sell it back down. But they are the market. They are the bid forever. And everybody else benefits from the fact that the stability and the volatility is reduced dramatically. And the price will be significantly higher over time if, Mooch is right. And this is a property, they'll allocate it like they do real estate. And they could, in the context of crypto, go up to 20%. And I personally believe that crypto in the next decade will become the 12th sector of the S&P because it is so strong a potential for reduction in fees, transparency, auditability, and just better financial services globally that it'll make its way there. But it can't happen until somebody starts to regulate it. Now, good news, we've got the Loomis bill, we have the Haggerty bill, we've got the Toomey bill, we've got bipartisan effort. I think all 3 of us have been to the Hill multiple times to talk to these senators. to talk about give us the code, regulate it, and then, when that happens, Cathie, bar the doors. Watch what happens.
That is Mr. Wonderful himself explaining how much the crypto industry will benefit from suitable regulation. O'Leary has been talking about the growth potential of a regulated crypto industry for some time now, and we seem to be getting closer to the future the venture capitalist envisions. According to reports, the Lummy's crypto bill is ready and will soon be introduced in Congress. If it passes, this bill could usher in a new era for the cryptocurrency industry in the United States and the rest of the world. What are your thoughts on the interview and the path of regulation for the crypto industry in the United States? Please drop your comments below and don't forget to give this video a thumbs up. Thanks for watching.